Good morning, everyone. Today is April 15. So here's a brief update on the current state of the markets, and we'll focus on the US dollar index, WTI crude oil, spot gold, and the Australian dollar. So let's get straight into it. So first, the US dollar index. The index attempted a modest recovery on Monday and trading around 99.7 after hitting its lowest level since 2022. This comes amid growing concerns over stagflation and weakened consumer confidence, with last Friday's data showing the lowest sentiment reading in over 3 years. So, despite the temporary relief from the extended tariff exemptions by the US, the overall pressure on the greenback remains. And dollar fell sharply last week, shedding around 3% as fears of slowing growth and escalating trade tensions drove investors away from the US assets. And technically, the index remained below key moving average, including the 20-day SMA at 104.77, and the MACD continues to signal downward momentum, while the RSI sits at 25.45, indicating the market is in oversold territory. Momentum indicators and lack of solid support levels below current prices suggest the further downside risk will remain. So, next, crude oil. The prices rose slightly in early week trading, supported by the supply concerns and a weaker US dollar. WTI briefly approached 61.3 amid easing fears of a global trade war escalation. However, the market remains very cautious. Investors are weighing the impact of potential US sanctions on Iranian oil exports against the backdrop of weaker global demand data. The balance between supply fears and demand concerns is keeping oil in a consolidation phase. And on the technical side, WTI is fluctuating in a range between 60 and 63, and the RSI is at 37.5, reflecting a weak bullish momentum after a sharp previous decline. Resistance sits near 63.64, while key support holds just below $59. The price action suggests solid consolidation with sensitivity to macro headlines and inventory data. Next, we will talk about gold. Gold continues to trade strongly, holding about 3,200 per ounce after briefing touching a new all-time high at 3245.7 during the Asian session on Monday. Fundamentally, gold remains well supported by ongoing geopolitical tensions, a weaker dollar, and expectations that the Fed may cut rates multiple times this year. Although Trump's tariff pause for tech goods provided some relief, uncertainty over the global trade policies continues to drive the safe haven flows into gold. And technically, the 14-day RSI is above 67, suggesting overbought conditions. While momentum remains strong, we could see short-term consolidation or minor corrections. And the support levels include at 3175.6 and the 5-day moving average around 3142, while resistance is expected near the 3300 psychological mark. So last but not least, the Australian dollar. The Australian dollar is seeing a short-term recovery, rebounding from 5-year lows and currently trading around 0.632. This rebound is largely driven by improving risk sentiment after US tariff reductions on Chinese semiconductors were announced over the weekend. So, despite this, the structural weakness remains in place. From a technical standpoint, the Australian dollar pair is facing resistance around 0.6389, while the 20-day and 200-day moving average are trending downward, indicating continued long-term bearish pressure. The RSI is at 55.5, is slightly bullish, suggesting recovery momentum, but the MACD is still subdued. This signals a fragile technical structure with no clear confirmation of a sustained trend reversal. So to wrap things up, the dollar is still on the back foot, Oils is holding steady, and gold is pushing higher as the investors stay cautious. And keep an eye on the yields and any surprise headlines. And trade safe, and we'll see you in the next update. Thank you.